Wholesale price inflation eased to 0.33% in September, the lowest since June of 2016. Inflation was kept in check largely because of fuel, power and lighting prices, which fell 7.05%, and manufactured product prices, which fell 0.42%. On the other hand, primary article prices rose 5.54%, and food article inflation was at 7.47%. We're also watching out for the consumer price inflation numbers that come in later this evening, expected at the highest levels in about a year, but well below the 4% mark, which is what the central bank will be tracking. Let's go across to Aditi Nair, Principal Economist at ICRA, for a read on all of these numbers. Aditi, thanks so much for taking the time to speak to us. Let me actually start with the wholesale inflation numbers, which came in, sort of sending the same signal that has been sent by many other indicators, which is that demand conditions are weak, and that, I guess, gets reflected in both headline and manufactured goods inflation.
Thanks, Ira. Definitely, I think demand conditions are weak, so is pricing power. And also, when we look at the global scenario, commodity prices broadly are quite sluggish as well. And that's really impacting the landed prices of imports and keeping an overall slack as far as the WPI inflation is concerned. Here we have two major factors that have pulled down the WPI inflation to 0.3% in September, which is fuel and power and the non-food manufactured products, as you mentioned. Now, interestingly, as far as the non-food manufactured products is concerned, we got month-on-month flat reading. But because of the base effect, we got a very deep disinflation coming in for the core WPI to 1.1% in September. So overall, either ways, the prognosis is really the same in terms of what are the factors that are leading to this weakness. I think it is weak demand and weak commodities and weak pricing power. So overall, not a very good scenario. On the other hand, if you look at food prices, the inflation has barely budged. It's just come down by about 20 bips between August and September, because whatever has been the progress as far as dampening inflation for fruits has been totally offset by higher inflation for vegetables driven by onions. So as far as food inflation is concerned, they're always going to have these temporary upticks, but I would still say that the late withdrawal of the monsoon and the flood-related damage to the standing crops is something that needs to be viewed with caution even in the current quarter.
Okay. Aditi, what would you expect to see on the CPI side, particularly on some of the urban components which have been rising lately?
So, on the CPI side, I would expect the inflation to rise up to about 3.4 to 3.5%. That bit higher could be because of vegetable prices again being a little higher than what we had forecast. But I would still expect it to be well under the 4% mark. Now, going ahead, we do expect this inch up to continue, and, main contention from our side is that food inflation is likely to inch up because of various factors, but the core CPI inflation may not fall significantly and is likely to not be in line with what's happening on the core WPI, because the composition of the indices and what drives them is completely different. So we shouldn't expect to see the disinflation in core WPI seeping into core CPI anytime soon. And therefore, we are likely to see mild upticks in the CPI inflation going ahead, bringing it closer to 4% over a period of time. But yes, only close to 4%. We're not expecting it to breach 4% in a significant way going forward, and therefore perhaps there will still be some more space for monetary policy to support what is clearly fairly deeply entrenched and structural growth slowdown.
All right. Aditi, we got the IIP numbers on Friday. What to you was the most surprising of the lot? What stood out?
So, Ira, as far as the IIP is concerned, we were fairly certain that the numbers that we saw in July were going to be a flash in the pan and were not going to repeat themselves in August. We had expected really tepid 0.2% growth in the IIP, so we were a little bit surprised to see the contraction in the IIP, the extent which was there in the August numbers. I think one of the sort of new sources of volatility in the last few months has really been intermediate goods, because we suddenly got this double-digit growth for 3 months, and the growth halved from about 14% to 7% in August. And that's actually one of the biggest reasons for the sequential dip as far as IIP's performance is concerned. So auto, coal, mining, electricity, all of these were well known. But I think what's been a little bit of a surprise is this volatility in intermediate goods that possibly we've not been able to track very well.